As we all count down the minutes to retirement, we are also counting on the fact our savings will be enough. Joining us now to talk more about this is certified financial expert Joe Bert. Joe, good to see you.
Good morning, Andrea.
So what are the most common reasons retirees wind up broke?
Well, the sad truth is that we don't learn this stuff in school. You know, we go through life trying some of this, trying some of that, wake up at 55 years old and find out what we have is a collection of financial accidents. And because we're not educated in this, we get advice from a lot of well-intentioned people, our brother-in-law, our neighbors, used to be Money Magazine, and we find out that we really don't know what we're doing. And that's why most people reach retirement in precarious financial condition.
And you've got a list of reasons so many of them do. We'll start with the first one here on your list. You abandoned stocks. That's a big mistake.
Well, you need growth in your portfolio because the reality is when you retire, let's say 65, statistically, as a financial planner, I have to worry about 20, 25, sometimes 30 years of life expectancy. So you need growth in your portfolio. Particularly with today's low interest rates, you can't afford to put your money away at less than 1% and expect to not run out of money unless you have millions of dollars, which most people don't. So you need to have some growth in your portfolio, and you have to have assets, whether it's real estate, whether it's mutual funds, stocks, but you got to have growth, and that's where you'll get it.
And when it comes to investing, it's all about diversifying because some people make the mistake of investing too much of their own money just in stocks.
Exactly, or they don't know what they're doing. You know, I'm really kind of disappointed about the commercials that I see on television or what I hear on the radio about encouraging people to get in the market and doing day trading. And the market is not a casino, but unfortunately, I think that's the mentality that a lot of people have today. It's get rich quick. And there's a difference between investing and speculating. And so some people think, and then they get burned. They lose money and they get disillusioned and they never get back in. And this is the challenge that we deal with certified financial planners all the time, is educating people that you need to have growth, but don't be betting the farm if you don't know what you're doing.
That's a great point. Don't speculate. Let the professionals do that. Here's another one. As we see life expectancy change, you live too long.
Yeah, one of the worst things to do is have more breath than you have money, and that is a challenge. If people don't realize that life expectancy, even today, retiring 65, as I said, I've got to worry about 20, 25 years, and with medical science being what it is today, we're all going to live a lot longer. So you know, your folks might have died when they were 75 or 80, 85 years old. Good chance are many of us are going to live to be 100 years old. So that's a long time, and you've got to get your money to grow because I guarantee you the price of gasoline, groceries, electricity will only continue to go up over that 25 or 30 years.
Here's a mistake we all have made at some point in our life and will continue to do so, I'm sure. You spend too much.
Well, you have to know what you can afford to spend. One of the worst things to do is sail off into retirement and continue your lifestyle if you're not going to have the income throughout your retirement years to maintain that lifestyle. So you need to understand what your planning is, what your budget is, what you need to spend, and live within your means. And don't go crazy. Fortunately, some folks have the tendency to do that.
Yeah, and then another problem, you rely on a single source of income.
Well, a lot of people just have Social Security, and so if you're living on Social Security, if that's your retirement, you're living below the poverty level. So back in the day, people had pensions in addition to Social Security, so you had guaranteed income. Many people today don't have pensions. I think about less than 18% of the working public today have a guaranteed pension. It's usually only available today if you work for a large corporation or if you're working for the government or a school teacher or a policeman or something like that. And those are even going away to many degrees. So what you're going to have in retirement is not only Social Security, but more importantly, what you've been able to save and accumulate over your working lifetime. And the best way to do that is put your money in your 401k, your 403b, or use an IRA.
Any other advice when it comes to avoiding not having enough in retirement aside from the 401k and an IRA?
Get started early. Know what you need to do and get focused on it. You know, as I say, Andrea, if investing and dieting were easy, everybody would be rich and skinny, and it's not. But you got to get started early, and the earlier you start, the easier it is. And
pace yourself, right?
That's exactly.
Joe Bert, always great to see you. Where can people find you?
Just Google me, 2 words, Joe Bert, B-E-R-T.
Joe, we always appreciate it. Thank you.
Thanks, Andrea. Have a good one.
You too.